Hello, and welcome back for another video. So right now we're doing some gold analysis. Um, in the last video, we really talked about the U.S. dollar and just some of the geopolitics and fundamental analysis that I've discovered while looking at this pair, or looking at the pair. So right now we're looking at gold, and if you watch any of my prior videos, I was mentioning that um, I don't want to say like I wouldn't be interested in trading gold, but I would be extremely hesitant once we start to enter into this region of like 28, so basically anything over 2075, I'm really gonna be like reassessing my trading strategy and my plan that I have in the market, because obviously price would be like quote unquote in no man's land, which for means that price has never been here before, so we don't have any prior price action to back the data up off of, like on like as a price action trader or technical analysis trader. I heavily rely on previous price action to determine, what price could potentially do in the future, or like at the present time that I'm looking at it. And if that information is not available, then that's like the core brunt of my trading strategy, of my technical analysis. And so I'll have to develop new ways of looking at the price action for gold. Okay, so here we are again on the 3 month time frame. As I mentioned, like I'm becoming fond of looking at the markets at such a far time out, because it is looking at it quarterly. When you're thinking about businesses and their reportings and stuff like that, like as a retail investor, um, these people are reporting out their quarterly earnings or their quarterly this or that, but like, as traders, we're just trying to get out here and get money, hopefully every day or several times throughout the week. And so sometimes the information that we can receive can become like convoluted, based on our desire, our need for attracting money, as well as, what the market action, like what the price action is actually, like the story that is actually trying to tell. So, um, just looking at it, it's the beginning of the month, and I like to start out each month by, um, like, I say it's a relationship, but just like spending time with each of my currency pairs or commodities that I like to look at, and really understand the language that they're speaking, and the information that they're sharing with me. So, um, right off the bat, I'm just again like looking at price action. Like I said, we have this basic harmonic pattern that is present here. Like if you look at it on the line chart, you can probably kind of see it. I mean, I see it better with the candles. The wicks kind of throw it off. But it's basically just kind of what we see on the US dollar. It's just more condensed. And also looking at it on a 3 month time frame. So price is sticking above the 38.2% Fibonacci from here to here, um, which indicates that price is still wanting to move up. But we noticed that over the, like, this is from July, right? So this candle will print in 25 days, 26 days, and we noticed that we had a brief little retracement here, or not even a retracement, because we did have like a high up here, and then we had this drop. So we're noticing that price action is at an interesting point of like showing respect from the 1885 level going up. So just how far up, how fast, it remains to be determined. So I actually have in my analysis that the US dollar is currently rising. For some reason, I'm kind of feeling like it might stagnate between like the 106, like 105 and 106 levels. I could be very well wrong, but um, as we're thinking about the rising of the price of the US dollar being directly correlated to the rising of inflation, right? The value of the dollar against different currencies in the market, it's a direct reflection of that. And as we've experienced, inflation is not a good thing. Or like, I don't want to say nobody likes inflation, but there's been a lot of like negative talk about it, and it's been making things a little bit more difficult in the economy. As I mentioned in the last video, that consumers are overall spending more, especially like with back to school shopping. Consumers spent on average an additional $24 million this year for back to school shopping because of inflation, because of the rise of inflation. So um, as we're potentially could be seeing the dollar rise, that means obviously the gold moves in, not always, but it moves inverse to the dollar. I mean, because it's the gold versus the dollar, but they move in different ways or whatever. Um, so, so as we're looking at the increase of inflation and the increase of potential gold, like potentially the price of gold, um, I just noticed that we're like at this interesting point. So let's just drop down to the monthly, and we can see how price kind of really stuck between 887 and let's say 1977 um, over the past couple of months. We're just kind of here in this zone, right? And um, for me, I think that's an important indicator. Now, I'm hoping that we can see something like this. Like, if you notice how this and this kind of mirror this, um, we're gonna take the wicks out of the situation, but they're, like tweezers or whatever you want to call it. We I would like to see something smooth happen like this. Um, However, geopolitics and news and just different things are going to really take the forefront of what's actually happening in the market right now. So um, again, we're really sticking at this 23% level at like 1949. We have several months of consecutive touches of just like being right here in this zone, and I think that that's something that is important to highlight. Now, I'm not usually going to do this because I try to keep my charts a little bit more clean on these guys because it can get pretty crazy, but I'm going to draw a fib right here because I'm just curious to see where exactly we're lining up. Okay, so if we're looking at this white one, I'm going to make it a little bit bolder so it can just kind of contrast. And we're still on the monthly. I'm gonna lock this, and I'm gonna hide some of these because they're kind of in the way. I don't need to see these lines on a larger time frame. I'd be more interested to see them later. I'm looking for entries and take profits and different stuff like that. So that's why I'm taking these off. Lately, I've been feeling like my charts are just, oh my gosh, it's so much. But anyway, so all right, I might leave these ones. Okay, so all right, so I mentioned that we're right here at the 23%, and like you see how prices kind of just like stagnated, right? And it's kind of ugly to really look at, and it's true for our momentum indicators too. That price is just kind of very neutral right here as decisions are being made, um, you know, and within government policies and government leaders and organizational leaders, different stuff like that. It just looks super stagnant. Like, and I think this is a very telling story. Just this little thing right here. I'm gonna put a little ellipse around it. I feel like this little thing right here is telling a story. Okay, it's like, I don't want to say like it's ugly, but I mean, because this is like money, right? We have to think about it in that context. And I think for me, sometimes I just see lines and candles and patterns, and I don't fully take in the full spectrum of everything that it is. So, long story short, it's basically just kind of hanging out here at the 23. I don't know what it is about this pattern, but um, it it's very neutral. It's very you know, like I said, telling. I feel like this really just tells a story, and I, as a patient trader, as a person who practices or hopes to practice consistency and discipline in my trading endeavors, that this um, is telling me a story, and I'm ready to listen and see what information is going to be revealed over the next coming days, months, years, etc. Um, so, like I said, price is pretty neutral for me, in my opinion. Um, for some reason, I would like to see price rise, but I don't know, if it's just going to kind of stick around here, maybe like the 1964 or 1974, just like hanging out in this region where it's been before, playing and riding on this 23% line. We're not really getting, like this was a bearish indicator, this was a bearish indicator, but then look how we have it. Like these two are super neutral, and then this bearish candle, even though it did wick down, closed, quite a bit up, like at the 50% of both of these candles, and I think that's something important to notice. Um, and, we could very well continue to see price just kind of rock on this level for quite some time as different decisions and things are being made in the market. All right, so oopsie daisies. Okay, so here we are at the weekly time frame, and I like how price remained a structure here above 1887. I like that. I like this bullish candle, indicating on a smaller time frame now, like on the weekly, because we were looking at the 3 month and the monthly, because I wanted to get like the overall trend, like get a feel for like the whole trend of the wave. This is technically the first drop, second drop, third drop, so here we are in this momentum. Now we don't have any crossovers of any EMAs, but we do see how it kind of have concavity here, and we're moving back forward or moving back up potentially based on this price action. Now, most immediately, like I said, like as a retail investor taking trades multiple times throughout the week, 1964 is the number that I'm looking at for the play for this week, and maybe continuing on to 1974. For me, I probably stop, or like not stop, but like pause, reflect, reassess around the 1980 level, 1980 or so, maybe 1987, just because I want to see how, again, like how price really responds and it keeps moving through. But based on just basic market structure, price could continue to rise well above up into the 1989 and so on and so forth, like and beyond, as we're looking at it. As again, we're have a clear close above the 38.2%, moving back towards the 23%. So how basic Fibonacci works is like this is a continued trend, like this is a trend continuation pattern. And so if we're thinking about Elliott waves, maybe this was 1, 2, 3, 4, 5, and then we had the breakdown. And so here we are after the correction, and we're going back in to see, how high can we go? We, still have, like I said, we didn't get a crossover, but it happened late last year. Um, and so like right here, there's just like this gap. Now, like I said, I am bullish. Usually, like if price is playing in between these MAs, I think of them like Bollinger Bands, and I kind of want to look for, or something akin to Bollinger Bands, and I want to look for the best, high probability opportunities. But based off of this just basic structure from the weekly, I'm leaning bullish on gold, which is interesting because I'm also bullish on the dollar. So as news releases come out, as conversations are being had, geopolitical wars are happening, like all these different conversations, all these different things that are happening real time affecting the price action of the likes of gold and the US dollar. I'm really going to be paying attention to how the price action lines up with, my technical analysis. All right, so this is the 3 day. I'm really growing partial to the 3 day. So in the weekly, we had such a large gap, but here you can see we didn't cross, but we touched and we bounced back. So I like the concavity that we had towards the end of August, the strong bullish candle, and now we're really potentially moving upwards into greater things. And I know this sounds kind of arbitrary, but I like how like price action broke out of this box and then like kind of came and retest, because we opened here, right? So it moved down to retest this structure, and then now we're moving back up. So I don't know how that is really going to play out, but it looks favorable. So I am bullish on gold, which is kind of odd because I'm also bullish on the dollar. So I mean, not to say that they 100% move inversely, but it is implied, right? Gold versus the US dollar. So um, it's an interesting time, an interesting point here on the charts. And this is something that I'm going to continue to look at and analyze and drop my analysis here on YouTube for you guys, or on TradingView, however you're viewing this. Um, like I said, in the coming weeks or months, we're going to really see, will price really break above, and be in the all-time highs? Because that's what that's the vibe that I'm getting based off of just this little bit of information right here. We have strong bull candle right here in March, and I mean, it supersedes any candle that we've been looking at recently. So, and I also like have this arbitrary line that I just drew to kind of show like I was looking at a downtrend, but arbitrarily price came here and then moved up. I don't know which came first, the line or the price action. I just draw it on there and leave it alone. But I'm really going to be looking forward to, again, just looking at right now price at 1940, seeing how we do at the 1950 level. I mean, it's not new territory, so I don't think it'll be too much of a make or break for us to get back up in there. But then like after that, it's like, where are we heading? So I'll be really paying attention at the 1959 level and at 1969. Cool. Before, even I'm not really looking at downside just based off of how the market, like symmetry, like geometry is moving. I would continue to like to see price rise, especially, as we look at, like I said in the beginning, I like to look at previous price action in the past to see how price will respond when it gets to that point in the future. So every time we really come to this level of 1934, we experience, except for like this instance, right? In this most recent history, was the first time we had been there. Then we moved bullishly through there, and then we came back. I mean, even when you kind of come back to the level, it's bullish. Come back to the level, it's bullish. And then it got bearish, and then came back to the level and got extremely bullish. So that's the kind of pattern that I'm feeling for gold, and that's something that I want to continue to see. So we'll keep talking about it over the next coming days, weeks, months, years. So stay tuned for more analysis, and thank you for watching.